The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling a problem with us out here. We have the Dow Industrials down 273. NASDAQ is down 8. S&P's down 28. Gold contract up $46, trading at $15.30 an ounce. You get silver up 53 cents, $12.91 an ounce. Light sweet crude, flat. $22.81 a barrel, notes and bonds. You get the 10-year up 1 point and 11 ticks at 132.02, and the 30-year up 1.5 points at 177.14. Now, that being said, folks, you get over and to take a look at these bond market. What you are going to see is a change in trend that is absolutely phenomenal. The bond market was up, bottom line 4 points, got up to 181.08. Bottom line, gave it up in spades. And what I expect you're going to see, we have flipped into a consolidation in the bond market. Those lows of last week, more than likely, you're going to get hit again. King dollar right now down 980 at 101.837. King dollar just missed its high from a few years ago. Bottom line, that looks like that thing wants lower price. The euro is at 107. The yen is out here at 110.62, and the British pound is at 116 to 1 US dollar. Ride 'em, cowboy, Tom.
How about 7% moves one way and the other to start off, and it's 10 a.m. on Monday morning.
You got to love it, man. And I'm telling you, folks, we're going higher here. This is going to get really interesting watching this shake out. So the Federal Reserve, we were down limit last night. Federal Reserve comes out, and this is the key inside the Federal Reserve, folks, okay? The bottom line is that they're going with unlimited QE programs. And that unlimited aspect, it looks like when you're just looking at the first press release, that frees up the credit markets first. And credit markets are the most crucial to get it freed up. But inside of this, it also looks like that they are actually going into Main Street. And what Main Street specifically is, in my definition, folks, when they're talking about a small business. So if, in fact, the Fed is going to basically support small business, that's a monster start, because in 2008, that wasn't the case. In 2008, when you had the QE come in, that was flat out the largest corporations. You know, we know already know the whole scandal deal. The bottom line, they got the money, they privatized the profits, they socialize the losses. They get into small business, big deal. Now it's going to be the Senate and the House getting their act together, and I suspect you're going to probably see something out here today.
Yeah, I mean, it was a remarkable, and the limit down last night was like instantly limit down.
It was.
Right?
It was.
So I don't even think the Dow. I mean, I have a tick here on the Thinkorswim platform in terms of ticking across. You can see it actually like a bar in the 6 o'clock, but in the Dow futures, I don't even think. No, there was a bar, okay, too, for a split second, but. And then the pop this morning, I mean, I had to think, man, those highs to lows, I put it in the morning market report on the front page of TFNN today. You're talking about 36%, the pullback in the S&P from 33.97 to whatever the 21.74 last night, 33.97. So you're almost at 3,400. You go to 2,200. That's 36%. And in the Dow, because of Boeing, you're at 38.6%, 40%.
40%.
If you hit 50,
imagine that.
You could hit 50 or 60%, right? You could. But you're almost there. You're at 40% in the Dow. If your risk is to 50 or 60% in the craziest of moves, we're almost there.
No, listen, that if you can learn anything, folks, if you were around in the 2008 debacle, it should be a little bit easier for you to basically make your way through these markets, okay? When the Fed comes in, and this is basically helicopter money, it's all about liquidity. And the Fed's going to come in, it's going to be unlimited. Yep. And then the Senate and the House is going to come in, and it's almost going to be unlimited. So the bottom line is that the cash is going to be out here. The real question is going to be how many people are going to be able to do the paperwork, and how extensive is the paperwork going to be? which we don't know yet, okay? But let me tell you something, folks, okay? Everyone that's out there with a small business or any, basically in general, just get ready and don't mess around with it. Get ready to do some paperwork. And I don't think it's going to be expensive.
File for what's available for sure, man,
exactly,
right? The workers, and hopefully they take care of the workers in a dramatic way, man. Because if you take care of the workers and you're able to take care of the businesses, then things can almost revert instantly. And I'm being exaggerating, right? But it's that dramatic in terms of if nobody misses a beat and things resume in 3 to 6 months, then that's the best case scenario, and that's really what we need.
There's no doubt. And what the thing that's so intriguing here is that the market's going to be flooded with cash. So hard assets, folks, are going to be worth more money, no matter which way. I don't care what school you went to, okay? The bottom line is that when there's that flood of cash, which is going to happen,
yes.
The bottom line is that, and this is why, and this is going to be controversial, what I'm going to say right now. I mean, I know a lot of the gold bugs can't stand this, okay, as to why the Federal Reserve got in place in the Depression. Do you know what I'm saying? Because what you do have, yes, they're printing money and all that, but guess what? If it wasn't printed, guess what? We'd be out, running the streets in a bad scene right now. Or not now, but whether in 2 or 3 weeks, okay?
It probably, if the Fed did not exist, we would probably be in it by now.
Yeah. Oh, listen.
I mean, think
Tommy,
about the liquidity.
We remember. Okay, so pitch this. Do you remember? We were in Katrina, folks. Okay, and let me tell you something. I remember saying to you specifically. Remember, we were there about, I don't know if it's 5 days or a week or whatever it was. Yeah. But I remember turning to you saying specifically, I says, okay, there's a problem now. We got to get out of here, because what we had seen, folks, is this. We saw the riots and all that. We were there actually when it first started, because we were walking down the street and we came back, told the Hilton, I got the manager to tell him, man, you got to shut this place down right now, which he did. But I remember turning to Tommy about like 4 days into it, and there were regular people, and they were hungry, and they were going by, and that's when I said to you, we got to get out of here, man. Because that was a heads up, folks, okay? I'm talking about just regular people, man, that they were looking at that hotel, and they knew food were in that hotel. So it's a big heads up, man. And, the bottom line, we'll see how this shakes out today. But I like how it operated today. When I was driving in, I'm listening to your program, and I'm saying to myself, oh, my God, man, you talk about fluctuations, man. I mean,
it really is, man. I mean, even if, so you go to the high in the S&Ps, like it said, it's 2386. Is that where we're at? 2386 down to 2218. I mean, 7% in the span of, and since that low, man, the low 2218, we're up 62 points. We're up almost 3% already. Just crazy volatility, man. But like you said, it's we've already come back so far. The stimulus is going to be there, and hopefully there's a recoil effect too. I had a birthday on Friday. We didn't really get to celebrate.
I know.
We're going to get to go celebrate when everything's calmed down. Hopefully a lot of those things get pushed back and we get some acceleration. I have a family wedding in April. Not going to go. It actually got pushed back now to September. So I wonder how they cram those in. Hopefully there's an acceleration. Some of that at least gets made back up.
It will.
Yeah, it will. It has to.
Yeah, right. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow Industrials down 175. Nasdaq's up 39. S&Ps are down 10. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials down 235. NASDAQ is up 15. S&P is up 21. Let's go into the NDX 100. And what you're going to see in here, folks, okay, this is a really good sign that this NDX is going to keep going forward. You got the chip stocks. We talk about this a lot. You know, my take is the chip stocks take the NDX 100 up, the NASDAQ up, and it grabs the rest of it. And right out here this morning, guess what? You got Microchip up 13.8%. You got Micron up 8%. You got ASML up 7.2%. So out of the four top leaders, bottom line, three of them are chip stocks. Then we got Netflix in there, up $24, trading out at, look at this Netflix, huh, man?
I know. Can you go back after you do it to the description for them, for the market cap? That's all, after you do the chart. I'm just curious with the, yeah.
So,
157 billion, okay.
Billion.
Yeah.
Yeah. Pretty wild,
you know,
right?
I want to, after, go ahead, because we can pull up Disney. One thing I was looking at, right, like Disney in the future at some point might just be graded on how many subscribers they have. Right? And,
yes.
and that might be 10 years down the road. But everything else they come with, the parks, the fact that they're a $150 billion company, right?
Right.
So, you know, the brands they have, Star Wars, Marvel, Fox, ESPN, Hulu, the parks, Mickey Mouse, Donald Duck. It's remarkable that they haven't seen the pop when you know that they're going to get a boost. This is definitely going to streamline their Disney Plus numbers. It's not beneficial because the loss to the parks and everything, but this is going to speed up their growth on their streaming platform. And Disney hasn't really seen any of that because they have such woes in terms of nobody's going to see movies. But they might be able to take some of those movies and push it out to the streaming platform. It's just, you know, they're right at the same market cap. And I think I would take a company like Disney over a company like Netflix, even though they may both be strong. The opportunity there, man, over the next 5 years, something like that, I really see Disney coming back strong.
And what is going to happen, right? If they get what they want, well, okay, so the Democrats, Republicans, the whole ball of wax. Okay, if the Democrats get what they want inside of the bill, folks, what's going to happen is this, is that there's not only middle America that's going to get checks. There's the folks that basically are broke are going to get checks. So what you got to understand there is that when that happens, there's going to be folks that are going to be able to get certain services and maybe go to Disneyland that they've never had a shot to go to Disneyland. That's the bottom line. And guess what, folks? There's nothing wrong with that, because these big corporations, they claim that, they're all fine by themselves until something like this happens, and then they're also going to get more money than they need. That's the reality. But,
And just for some context on Disney, to wrap it up, I mean, I have a chart. We're back to almost 2013 on that stock. It's 2020. When you think about how the world has changed in terms of the movies they're putting out, they put out like 9 or 10 movies that did $1 billion last year. I can't imagine that they're going to go back to, prices on the scope of what they're going to do with streaming. If you ever said, in 6 years we're going to have streaming, we're going to have 20 million subscribers, and it might get rough if nobody can go to their parks and nobody can see movies for the next 6 months. But if you're in there for a couple years, man, their streaming numbers are going to go through the roof, because guess what? If you're trimming bills too, maybe this is an acceleration of cutting the cord. I was thinking about as well, because we're considering it $200 a month for cable. How about now is a good time to save a couple $100 a month if you even have to go back to part-time, right? Some people might have even that option. Part-time from home, keep the bare bones of a business running. It's just across the board.
It's so funny they just say this. So last night, folks, I emailed one of my assistants specifically cutting the cord in a couple places.
We've been thinking about it too. So that's we were talking about it. Bills
happening.
Are high.
Right.
It's nothing like a little motivation. And I say it, but seriously, that's to get off your butt and do it now. A lot of us, I think, you just drag the feet. Remember, I was talking to you. I thought about cutting the cord, and folks, it took me like 9 months or 12 months of saying it. I said, I'm going to wait for the end of the football season. And I said, I think I found something on whatever it was, HBO or But then what did they do? They raised my bill on Frontier from $130 a month to $180 a month, and I canceled it the next day, literally.
Oh, my God.
So similar action in terms of just the straw that broke the camel's back. A lot of people canceling.
Yeah, and, over this, I mean, for news in this aspect, I got it all on streaming. I mean, no matter where I was, the bottom line is that I just kept Googling it on YouTube. Right.
It's almost
looking
vice
for
versa.
Live streaming. So it was like, okay, man, what do I even need it for?
You could make the argument that, people are going to be home, right? You need that. But I think it's just an action where you really need to cut some costs right now. And everybody knows that whether you have kids, whether you have adults, just like you say, you have Netflix, I have Amazon Prime.
Right. I
could sign up for the Disney Plus bundle, which gives me Disney Plus, Hulu, and ESPN. You have all the programs you need to watch, and you're saving, $100 a month probably when you add everything.
I forgot that they have Hulu too, so that's pretty cool.
You can get the bundle. That's, I think, $13 or $14 a month. Disney Plus is $7.
That's
the
it.
bundle is $13 or $14. Yeah.
That's crazy. Unreal.
Yeah.
So let's go overseas and take a look at our markets right now. You get some stability in them, folks. After the fact that we went up and down, whether 4 or 5%. The DAX in Germany. We go take a look at the DAX in Germany. What you're going to see out here with the DAX is that it did not break its lows, of last week. The low in the DAX in Germany was on the 16th. We got down to 82.55. On the 19th, you got to 82.57, so 2 points above it. Now what we have here is 84.80. So now that market's going to be looking for is a higher high. You get 3 lower lows right now. The UK is a little bit rougher. Let's take a look at the UK, because I believe the UK broke it and then broke it again. No, it didn't. Okay, it didn't. The UK, same day. UK was 48.98 on the 16th. On the 19th, it was 49.42, and today, 49.22. So it did break it today. Didn't break the low, but broke the one of last week. So UK is a little bit weaker than the DAX, no doubt about that. Our own markets, it's the NDX still, which is pretty amazing. Gold, let's go take a look at the gold market. So gold, folks, okay, the bottom line, when everyone's broke, they'll sell anything. That being said, it looks to me like the gold market bottom line bottomed out here. Right now, you're at up $46. You're at 15.31. If I take this and put this on a continuous contract, what you're going to see, I don't believe that we broke this lowest swing point. Let me see this for a second. So I'll put this on Actually, I put this on a 5-year weekly so you can see it clearer. Yeah, we didn't. Interesting, man. I mean, the swing low out here was 1446, and it went to 1450. Unreal. Hey, that's positive. Bottom line, you're $4 above it. It couldn't break it, and that was after extensive selling on the way down. Fast and furious, folks. But guess what? You don't break a swing point, says quite a bit. So it's a wild one, man. Oil, poor oil. No one loves oil anymore.
Oh, man.
Yeah.
Some fortunes made and lost, I imagine, in that oil market over the last, even over the last 3 days, man. From $20 and change up to $28 and change, back to $20 and change from Wednesday to Sunday, man.
Amazing.
Yeah.
Dow right now down 276. NASDAQ off 5. S&P's off 26. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials down 330, NASDAQ off 13, S&P's off 31. And, you know, what you can expect intraday out here, folks, is, I expect the volatility to continue, but I do expect higher prices. This is just like almost the replay of 2008 when the Senate and House couldn't get it together, except this time the market is not smoked in an amazing way. In 2008, when they came back, The bottom line is that the market got smoked almost 800 points, Dow points, and that's when we were at much lower prices. And that took them all of about an hour and a half to get their act together. So this is going to be wild watching how this shakes out. But I expect we're going to get something before the day is over.
I was just going to say, I wonder how it'll play out in terms of where the market is, right? And because the pressure on these politicians, as there should be pressure, man, as things fall apart, you let it go too far in one way or the other, man, and things would implode. The market is kind of hanging on the brief assumption that things will happen, but it'll go lower if it becomes clear that not enough is happening.
Right, and if they keep arguing for 2 or 3 days.
Right.
Then forget it. Then you're going to see some, because what has happened here is that the way the Federal Reserve came in. So the way the Federal Reserve came in, if you're in business, you have a life jacket out here. That's kind of how this shakes out, folks, okay? What the majority of citizens, though, do not have a life jacket yet. And that's what they need. That's what's going on. And this market, bottom line, will react very quickly. I mean, very quickly. So we'll see where that's going to shake out.
We sure will, man.
Let's go into the Dow Industrials and see the strength versus the weakness out here this morning. You have, so the Visa is putting 57 negative points, Apple 42, United Technologies 37, Home Depot 53 positive, Boeing 21, Walmart 19, Intel 17. If we go over to Boeing, let's go take a look at Boeing. Boeing right now, this cannot get traction, man. That's the real bottom line.
And the news out there was like an upgrade from Goldman, right?
I heard that.
I believe so.
Yeah, so
that's raised at Goldman, fear priced in. That's a dicey one, man.
I agree. Listen, man, there's no doubt.
You want to start buying some of these companies like Boeing, like the airlines, like the cruise industry. You're banking on a government intervention, and with everything going on in politics and with people out there saying we better make sure people taking this money don't buy back, they don't do this, they don't do that, those terms can be pretty harsh on a company, and hopefully they are harsh, where they're not just free gifts. So don't expect a huge rebound there. I mean, global flights shut down, man, and there's no saying that this is going to go away in a month or two. I just be careful with Boeing.
Right. No, and what you have here, and this is what's really important to wrap your head around, folks, okay? So when this happened in 2008, okay, that the government came in with big money to save these companies, they didn't come in like at $97. Okay, that's the bottom line. Okay, so Pitch, you got to put yourself in the aspect. Okay, are they going to come in at $50, $60? Who knows?
It's possible.
It definitely is. Because the bottom line is that we're sitting here like really not understanding what their balance sheet looks like. Well, they're going to get hold of their balance sheet, folks. Okay, and Boeing, no doubt, I would say it was probably too lackadaisical for the last 6 months period. I mean, that's the real bottom line, And
the way I look at something like that's so dangerous, like Boeing, is that there's so many other good opportunities right now, man, that might not have the drastic risk of a company that already, there's not a lot of goodwill, especially for Boeing, right? And it's not even exaggerating. Like, their actions just killed hundreds of people because they put out a plane that couldn't fly, and they almost did it in the face of repeated warnings about it. So do you want to be a politician that's out there sticking up for them, of all companies? That might be its own misnomer. But even like Uber, right? I mean, destruction, man. Now, Uber's taking it on the chin. But they came out last week and said, even if things go as bad as you can imagine, we're going to have $4 billion in cash in a year, and we'll be able to weather it. Well, you just went from 40 to 13 back to 21. There's opportunities all over the place. This could accelerate, and you're not risking, I think, where the company might go BK, and you're relying on Democrats and Republicans to save a company that has their own deal with the 737 MAX going on. That's just really where I see danger.
There's no doubt. And this is where it goes right back to the tech stocks again, folks. Okay?
Yeah, right. I brought up Uber. The opportunities in Amazon, right? That's not even, it was just at $21.85. everybody in the world I know is trying to buy stuff on Amazon right now, man.
Right.
Let alone we just talked about Amazon Prime. You know, that's one company that I just think even has underperformed because you have Walmart right up there. That's another company. If you're a long-term buyer and like Microsoft, I heard you talking to Dave on the technology segment, right? People signing up for a number of services online, technology, messaging, all that stuff. So, you know, there's so many opportunities to step in on a company like Boeing, man. But yeah,
and it's what's cool this time, folks, is this is totally different than 2008 because of the fact that you have the amount of cash flow that's going to go in them, but this wasn't a wrecking ball inside the credit markets. It's a wrecking ball that it's a total stop. And guess what? If it looks like they're going to put, you know, let's say the GDP goes down $2 trillion, well, it looks like they're going to put $4 or $5 trillion into the marketplace. So you know.
Yeah. And hopefully it's a little bit easier, as it should, because in 2008, I mean, there's a lot less sympathy as there should be for companies. They're just paying executives, leveraging home loans, taking all the money out of the market of consumers, versus, you know, a lot of companies deserve some money because there's a global pandemic that had nothing to do with, you know, going paycheck to paycheck, relying on businesses when somehow it never happened before in our lifetime period. The economy just stops for 3 months.
Right, and the law shut them down. That's the bottom line.
They have to do it. So it's a lot easier for politicians to sprinkle money everywhere this time as well, without repercussions of, you know, being somebody in the pocket of banks.
Exactly.
Yeah.
877-927-6648. Let's go take a look at some of the higher volume equities out here today. You have Bank of America is down 90 cents. You got Advanced Micro up $1.15. Let's see. Carnival's at $11. Forget that thing. Micro Technologies up 2.9, $2.09. Oh, this is Zoom video. This is one, folks. Okay, everyone.
Zoom.
They're raving about this. The platform in general, how easy it is to use. This equity here, folks. At the beginning of the pandemic, it was at $70 at $153 right now. Now, don't go buying it right now, but the bottom line is that this is something that I suspect all of us are going to get a heads up on of doing business in a quicker way.
You know, could you pull up, I'm not sure what I just did, but people must have done the similar. I wonder if, pull up the symbol ZOOM, just spell out Zoom. What is that equity? I pulled it up on Thinkorswim.
Zoom Technologies.
Because check out the run it had to 60 and then fell out of bed, man.
That's a different stock. Oh, my God, that's sick.
Do you think people bought into this thinking it was Zoom, man?
Yeah, they did.
On Friday?
Oh, that's so sad.
Isn't that remarkable?
It went all the way up to 60, folks, and then closed at 20. Oh.
I imagine there was some fast buying, thinking you were buying Zoom, especially when you watch it go up from 5 to 20. You say, man, this Zoom is rocking. It's up 400%. I'm going to buy in.
No,
it had to.
Exactly.
I don't know.
Crazy. The ticker symbol is for Zoom, folks, is ZM. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tom and Tommy O'Brien, we do appreciate you growling a problem with us out here. Now, folks, as you come over to our website at TFNN, you're going to see right under featured content, we have the Tigers Den. It's open house. Come on, join us, all the Tigers and Tigresses in there. It's absolutely free for 30 days. You can check it out. Very easy to do. As you come over to the TFNN, you're going to feature content. You'll see open house. You hit open house. When you first hit it, folks, it's going to say monthly, $39 1 month, $179 for 6 months, and $299 for 1 year. You can basically hit subscribe on either one of them you want. The order page will come up, and then where it says promo code, you're going to put OPEN, O-P-E-N. And as you put OPEN, at the bottom line, you're going to see that it subtracts the $39, so you will not get charged at all for the first 30 days. You cancel it, the 30-day, you'll never get charged, bottom line. If you like it, you stay in there. It's a great trading room, folks. A lot of great knowledge in there, a lot of great camaraderie in there, and a lot of great information. So check it out. We all your Tigers and Tigresses, no matter where you are, it works really well. Great technology, and you get a lot of great ideas. And this is when to make hay, folks. That's the bottom line.
I heard something, man. Like limit down which way? It was like 9 out of 10 days. Was that right? Did I hear that today? It might have been, man. It feels like every day last week. So one way or the other, right? I mean, it's crazy, but it's only 5%, and we've gotten down moves of 1,000 plus consistently, man. And today we're only within 200, but I think it was like 9 out of 10, man. Let alone we hit almost 13% in the S&P on one day, right? So remarkable.
It's over the top. There's no doubt about that. It's just about as intense as you can get. If we do go take a look at the SPY, what you're going to see, folks, is that we got to a lower low today. It rejected lower price thus far, 221.96. And the number it's got to get back inside is 228.02. And right now you're at 226.95. So we'll see where that shakes out. The NDX 100, now a different animal, as been talking, no doubt about that. The NDX got down, let's see, we got to 166.81. This is crazy. So check this out. That's 1 penny, Tom. That's 1 penny over the lows of last week.
Okay.
That's crazy, man. And that's inside the range once again, folks. Okay, so, hold on for the ride out here today, because I suspect this is going to basically go quite a few different ways. What they haven't done yet, and this is what the market's going to be looking for this, the machines are going to be looking for this, they're all going to be looking for this, and what they're going to be looking for is the heads up from the Senate and the House as to are they going to put votes out there, and are the votes going to go through not go through.
And what the details are once they come to it, right?
Oh, there's no doubt.
Yeah.
There's no doubt. And you're going to see those fluctuations go pretty quick, folks, because when I just brought up the headlines there, you can see it wasn't on the top of the headlines. Well, this was on the top of the headlines about a half hour ago. Okay, and it'll pop back up there because what the market's going to be looking for, the market is going to be looking for, no doubt that, listen, they got some kind of a deal. They're not going to be looking for the aspect that, number one, they say first off that they're going to have a vote and then the vote gets canceled in or other. Okay, and I can tell you, even last night when I was texting you, Tommy, that it's not cohesive to markets. What was supposed to happen yesterday, folks, at 4:30, the press conference was supposed to start, and it didn't start till 6 o'clock. That's not cohesive to markets. If that was a market day, folks, the market would be flipping out. Okay, you're an hour and a half late for a press conference. That market doesn't want to even hear that. It's not even close.
Sure.
It's like, okay, why? And of course, go ahead.
No, go ahead. Of course.
Well, in this, the environment what they're in, the market won't wait.
No.
The market's not going to wait.
We're past that point, for sure. Right. I was just going to mention, man, on the S&Ps, I was just looking back. If you go back to March 12th, 13th, so that's a week ago, Thursday, Friday, and then the 16th, which is a week ago today, those bars on a daily are all more than 300 S&P points, and you started at 2,700. So put things in context, 270 points would be 10%. Now it is when that was almost 13% down, I believe it was Thursday, and then Friday we got the huge pop. People, started speculating, maybe that's the bottom, right? You opened at 24.17. We closed at 26.52, but again, from 23.80 to 26.97, and then exactly 300 points on the dot, from 26.50 to 23.50. To have 3 consecutive days of 300 points from high to low in the S&Ps when you're trading at 2,700, that's 11%. Down, up, down. Just remarkable, man.
It is. There's no doubt, man. I'm telling you.
So that's why I say the market is past the point of waiting. That's when things really needed to started to escalate in terms of saying, we need something yesterday.
No doubt. Now, if we go over to the oil patch, folks, okay, this is still in tough shape. ExxonMobil's down another $1.53 out here. Bottom line, lower lows. Now, I got to bring this back almost 50 years. This is going to be really crazy, man. So we are at 1997 levels. 1997, June of 1997. Who would ever think, right? I mean, that's saying that, folks, that we have plenty of oil. That's the bottom line, man. It's like, this is like crazy.
What was that? Can you pull, what was that low in 2002?
2000.
No, you're back at
$3.
No, you're back at 82, Tom. 2002.
Oh, 82. Okay.
No, 2002. Yeah.
Oh my God, $29.75.
Okay, so I don't think we've gotten below that level yet, right?
Nope, $30.11 today.
Okay, so that'll be interesting, man, to see.
Yeah.
And what's crazy? This one falls into the category of a Boeing almost. It
does.
Where you're playing with fire, man. There could be a huge opportunity because oil's not going away tomorrow, right? A company like Exxon is probably not going away tomorrow. But boy, there might be some pain before that comes back. But just if you liked it at $70, you'll love it at $30. A month later.
And you're going to see, folks. There's no way that they're saying the dividend yield is 11% here. That's going to get taken away. It's not realistic. Let's go to Rich in Oregon. Hey, Rich, what's going on?
Good morning, Tom and Tommy.
How you doing?
Thanks for taking my call.
Sure.
Morning, Rich.
Good.
Thanks for calling.
I'm trying to be positive.
That's a beautiful.
Got to do it. It's the way to live, man.
In that case, I'm looking at a Nova Gold versus a Barrick Gold. And I know they're very different, but which looks like one that somebody would want to buy today and get the biggest benefit.
I love it. Okay.
Or is that even an answerable question?
Oh, yeah, no, it is. Listen,
Okay.
I know both stocks really well. You just stay right there. We'll do this quick as soon as we come back, all right? Because we got one more segment left, and we'll do it quick. Dow Industrials right now, folks, trading down 359. Nasdaq's off 34. S&P's off 37. Do yourself a favor, folks. Come on over to TFNN. Come join us in the Tiger's Den. Great trading room, free for 30 days. Tommy and I are coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with Rich from Oregon. We're talking about Nova Gold as well as Barrick. I would go with Barrick, and the reason being, Rich, is this, is that Nova Gold, okay, bottom line, low for the year is 369, the high is 980. They have Donlin Creek, folks, which is a monster mine, okay? Bottom line, though, is that they're building it out. They're saying that, yeah, they don't need any money for 2020, but guess what? You start building a mine out, and it's a monster deal. You go over to Barrick. Barrick is, bottom line, the biggest gold company in the world. I'd go with it, man. You 1704. Yeah, this thing looks to me like it wants to run up to, $19, $20. So the differential, if Nova had just been the exploration and not building the mine out, I would have said stay there, because then you're not putting any money out. You see what I'm saying? But the differential is they are building the mine out there in the middle of it. That means monster cash that they need. You know what I mean? So,
which is a drain.
Well, exactly. And they claim they have enough for 2020, but what about 2021? What month is it? It's March. Okay, that'll come before we know it. You know what I mean? So, cooking, brother.
Okay, thanks a lot, guys.
Hey,
thanks for the call,
Tom,
Rich.
Have a good day.
You just sell the S&Ps down?
I know what happened to these markets, man. You got the Dow down almost 500 as we go off the air. Things are moving so quick, man. It's you imagine some of those bigger funds, right? Can you imagine? You got to have people in Washington, man. If you can be in the hallways of Washington right now and figure out what is going on with this stimulus plan, boy, the jump you can have on the market.
There's no doubt. And, this pullback, though, in the S&Ps right now, on a 10-minute chart, folks, check it out. You're 6 minutes into it. This thing's going higher. You're going into the downdraft that had 128,000 this morning at, what time is that? 9:30 exactly. And guess what? You get all of 28,000.
Hey, we're down almost 40% in the S&Ps. Like we said, if you're buying and investing, man, there's the pain area is somewhere.
No doubt. Stay right there, folks. TD Ameritrade, Think or Swim, Basil Chapman.